it's well known that price spends more time kind of ranging than it does, violently trending. But at some point, of course, price will break out in search of liquidity. At some point, the state of liquidity will change and price will break out of this range. So either buyers will overwhelm sellers or vice versa, either because liquidity just dries up or as a result of large or aggressive buying or selling, or both. And we don't know when price will break out, but one thing to watch for, as well as consumption of liquidity on a candlestick chart, for example, is for the point of control. The point of control being, that's just a term for the price or the series of prices at which the most volume is transacted or was transacted. Okay, that's the point of control. So here I've got it highlighted in orange on the profile and in this kind of cream or light grey on the volume profile. Okay, point at which most volume was transacted. And so one thing to look for when you're anticipating a breakout is for the point of control or POC to start moving away from or outside of value. So here, for example, over a series of 5 or 6 days, all of the volume was traded in this kind of general area. On the 6th day, the point of control down here migrated outside of value. Okay, price is kind of quote unquote finding acceptance outside of value, down in these dark gray areas, okay, which were previously outside of value. And similar here, you get a range for 3 or 4 days. Halfway through this 4th day here, price starts building volume outside of value. Okay, the previous 3 days, really very little volume was transacted here, and on the 4th day, volume starts to build down at the lows. And if price is to remain in balance, I really don't expect sellers to be providing liquidity down in here, because these are relatively inadvantageous prices. The fact that volume is starting to build at the lower end of the range suggests that a breakout is imminent. Okay, an area we expect to reject price is failing to reject, and that tells us that likely either market buyers are weak or sellers are becoming more aggressive. Okay, they're willing to absorb or get filled at lower and lower prices. And so if I see this, the point of control or POC migrating outside of value, I'm usually kind of on the lookout for a breakout. Okay, that's not a bad example. That's value. Okay, doesn't need to be too precise. You can clearly see that's where the majority of volume was traded over a period of 4 days, and then on the 5th day, halfway through the day, volume starts to build up in these low volume areas. Okay, so areas which we expect to reject price aren't rejecting price. That tells us that buyers are willing to absorb sellers at higher prices. Okay, so while price trades up here, that both represents the consumption of whatever sell side liquidity was holding this range down. Okay, because price is trading there, sell limits are getting consumed. It also tells us that there's likely buy limits are willing to move up with price. They're willing to absorb sellers at higher and higher prices. Okay, so that's when you should be on the lookout for a breakout. And when price does break out, this is what you get. Okay, imbalance. So a low volume area, often referred to as single prints or singles, which just refer to the fact that price will only trade there one time. So a fast illiquid move in which what you'll get is traders kind of caught on the wrong end of the breakout. They'll be getting stopped out or unwinding, and the market has to start reaching to find liquidity.